Welcome to One-to-One Mining Investment London. We are very happy to have everyone joining us back here again for this event. Joining me here on stage, we have Tony Sage, CEO, Executive Chairman, and Director at Critical Metals Corp. We have Cailey Barker, Managing Director at Xcelsior Capital. We have Patrick Chidley, Partner at 3PPB. And we have Michael Wrotniak, Investment Manager for Orion Resource Partners. All right, so I think we could just kick off with a quick introduction to each of our panelists. If you want to just give our audience a quick overview of, your experience in the industry. I'm sure everyone knows it, but let's hear it again.
Okay, Tony Sage. I'm currently the Chairman, CEO of Critical Metals Corp, European Lithium, Kufi Limited. So three hats, all in the mining space, obviously. I've been in the game 45 years. I started off as a fund manager. Then I went to the dark side and became a promoter. And I've had mines operating basically all over the world: Africa, South America, Eastern Europe, Australia, and now in Greenland.
Cailey Barker from Xcelsior Capital, so former geologist, 15 years on the sales side, 10 years with BlackRock, running the funds there. And now at Xcelsior Capital, which is mainly critical specialty metals, private credit, working in partnership with Wogan Resources, the specialty metals traders.
Yeah, Patrick Chidley. I run a small investment group, and we're investing mainly in the private side, but also some public companies as well. So I'm an investor in the sector for a long time. I started my career, like Cailey, as a geologist, and been working on the buy side with funds in the States, US-based actually, and also on the sell side as well. So that's my background.
Yeah, morning everyone. Mike Wrotniak with Orion Resource Partners. We're a private equity fund exclusive to the mining and metals sector, focusing on sort of later stage investments. My personal background, I worked for a number of years at Trafigura on the trading side, joined Orion a little over 10 years ago, have been between our New York and London offices since then. Thank you.
I think we can start really just kind of looking at, global news has been dominating industry discussions these days. We've got tariffs, trade threats, all of those impacting the industry globally. So, what are some of the biggest impacts that you're seeing from these kind of macro geopolitical kind of issues that are coming up? So, how are those impacting the industry as you see it? Do you want to start?
Yeah, sure. Look, greatly. But it hasn't just started now with Trump's second term. It started well before with dominance by one particular country dominating certain markets. For example, in my field, in lithium, China controls about 80% of the world's export of hydroxide and carbonate. And more recently, what's been in the news is rare earths, around 90% of the world's supply of end product. So it does have that power of market manipulation, and it's used that power strongly over the last 10 or 15 years. One sector I was in 10 years ago was iron ore, and China at least 3 times killed the iron ore price to get it down, and they do that with their dominance. So that's what I felt on as a miner.
Yeah, I mean, it's a massive strategic shift that we've had that's unprecedented, and we've moved. The whole industry has moved from this rhetoric of, we've gone from ESG and green worlds to energy transition, and now the sort of critical piece of metals is now more strategic. I mean, we've sort of all seen that playbook. But I think what's more apparent to me, more than anything, is supply chains are completely broken, and Trump's done his best job to do that. Fair play to him. He's trying from a strategic point of view, resource nationalisation and protect those supply chains for the benefit of his country. And other countries are looking at following suit as well. And we're working with those governments to try and educate them and get them to understand our industry and how it all works, and more importantly, shore up these supply chains, because they don't. With China being less part of the party, it's a completely different dynamic. And we're sort of learning as we're going about how we do it all, and trying to put all the pieces together. There's lots of forums are now trying to put all these pieces together to understand how these supply chains works. But in the meantime, we're benefiting from great commodity rises. So, it's not all bad.
Well, yeah, and obviously this has been a major shift for the metals industry. I've been in the industry over 30 years now, and may seem like a short time versus some of the people here. I know there's a lot of experience in the room here, but I've never seen a market like this for as good as this for metals. I think that across the board, I know there's one or two metals not doing so well, like nickel, for example, but across the board, there's a great realization about the need for these metals. I think I've never seen so much newspaper coverage. That's another thing that's very important to note. Investors typically are massively underinvested across the board in terms of generalist investors in the industry. Not many counters to choose from, etc. And I think things are changing slowly on that front. I certainly think the critical metals piece is super important, but there's lots of forums and things, as Cailey says, but I think the action still needs to come through, and we haven't seen the impact of the actions yet. China still does control all of these various parts of the supply chain, and it's only just starting in the West, and some of these starts are being, I think, not well thought out. Some of them are quite desperate moves, but I think what we need to see, though, and what's happening is more and more government officials are realizing it as an important part of national security, and that's really where the rubber hits the road, I think. So I think we'll see more and more emphasis on it, because I don't see the situation in terms of market balance changing in terms of China's impact on the market until Western countries, at least, they actually take a serious view on this and start to actually implement policies that are pro mining.
I actually don't have a ton to add. That was all really, really comprehensive. But maybe what I would say is, in my opinion, the biggest impact, maybe quite obviously, has been the gold price. I mean, it's been amazing. And I think it's a function of the fact that this is all so new, and none of us can really predict with a high level of accuracy, what's going to be tweeted tomorrow, what's going to happen tomorrow, from a policy standpoint. And so people are, running to safe haven assets like gold. And as you say, Tony, it's not all bad. I mean, there has been some benefit here, and we reap the benefit through commodity pricing.
I mean, this government intervention and kind of the new regulations coming out pushing certain metals has really kind of dominated. Do you see that sort of kind of strong arm from government continuing moving forward and kind of shifting those supply chains? And
yeah, look, we've had a huge shift in Australia. For one thing, never in the history of Australia has a government given $1 billion to one particular company, and that was called Lynas. But even so, even with all that support financially, they couldn't build a plant in Australia. They had to move it offshore. So the actual processing of the rare earths is done in Malaysia, not in Australia. So governments can throw money at this problem, but until it started in the 70s, they just wanted to shift all the dirty mining to China. And now they all realise that was the biggest mistake that they've made, but no one's got the balls to put the plants in their own country. Even Trump is going to find it difficult in democratic states because he doesn't control those states to put plants in those states. So yes, government intervention is happening on a financial side, but whether it happens in the processing side, where is what it's needed, especially in the rare earths and lithium industries. So I don't think it's going to be a short period of time before the West is out of the problem it's in.
Yeah, I mean, I agree, and we all know that the US is powering on with, and we've been working with them, and they're very willing to cut checks with other, and we'll see how that actually plays out and how how it might bifurcate two different markets to be seen. Australia's sort of probably next in line. I think from my perspective, I think Europe's very, very slow, and the UK in particular is very, very slow. So we're hoping that, despite all the difficulty, the changing dynamic that the US is creating, we're hoping that actually it pulls a lot of government intervention along with it, and that's the positive. The difficulty is trying to understand all the idiosyncrasies in the middle. It's very easy to, like Tony said, it's like very easy to cut a check, but it might not actually solve the problem. Like we hear from governments, I want to invest in this mine, you name the commodity, you name the place, because we want to shore up our auto industry and we want to build out, our home domestic industries in various sectors. And you say, well, investing in a mine, do you know there's 20 steps between the mine and the auto industry? We all know that. It's got to be processed. It's got to be processed somewhere outside of China. You've got to build a battery plant, et cetera, all the way down the line. So that understanding that is quite tough. We financed the Hillgrove mine in Australia, which is a gold antimony mine. We did the offtake for the antimony. Nobody understands antimony. I thought I did until I joined this group. And trust me, unless you're trading it on a day-to-day basis, you don't understand antimony. It's very, very tough because there's lots of different products, lots of different quality. It's got to be processed. China's closed. Where do you process it? It's a conundrum where all the pieces need to fit together to actually find a solution. But I'm positive it will happen because there's enough impetus behind us to make sure that these things get solved.
Yeah, I completely agree on those points. I definitely think it's going to take a while, but it's going to happen. And we're going to see more widespread mining and processing across the globe and not just in one place. And governments already realize that. The US government, the European government is definitely, EU governments has got some programs in there already. But it's not enough really, and I think it needs to be more broad-based than just, there's benefit in supporting certain projects and making sure that they get permits, for example. Like in the States, there's at least 4 or 5 major world-class copper assets that have been stymied for decades, let's say, including Rio Tinto's Resolution project as an example. And those are really important for not just the U.S. national security, but also for the local economies in those places, and they've been denied that for many decades. Minnesota, there's a couple of projects that are very, very large scale, very important, and been stymied again by a combination of government and non-government organizations opposing these developments. And then there's the Pebble, of course, in Alaska. But fortunately, we've seen some progress with Trilogy's progress there, in which I think is a good idea. But again, we need governments to actually implement policies that are broad-based and sensible and also fair as well across the board. So not just picking and choosing projects, but also, I think, allowing more competition to actually get into the business. And that means tax breaks across the board. That means for exploration, for example. So, for example, and many guys are from Canada here. The flow-through system in Canada allows for about $1 billion a year of exploration money to come in from investors, and we don't have that in the States. There's something similar in the States for the oil industry, actually, but not for minerals as yet, and not in Europe, and it should be in Europe, because I think Europe definitely needs to get on its bike about this and get moving in terms of exploration, because we can stop the gap by stockpiling certain critical metals, and I think that is being done. But we need to think longer about this, and we need to therefore start exploration programs and make sure they're funded. Europe in particular is an area which needs this desperately, and it goes hand in hand with policy changes that should come in terms of deregulation, and I hope that these forums are trying to attack that sort of thing.
Yeah, I guess just quickly to add, Amy, and maybe going back to your initial point, I don't see this thematic of government involvement in our industry going away anytime soon. Look, I think, Tony, you touched upon this, that this has actually been going on for quite some time. It's just been done, on a much more quiet scale. China's been doing it since the 70s. I think the Trump administration's done a great job at really publicizing how important this is. I mean, how many times have you seen the words rare earths, on the cover of the FT and the Wall Street Journal in the past year? I mean, it's like unprecedented, and it's kind of cool, to be frank, that people care finally about what we do. I think a lot of that actually does come down to educating, and I don't want to say the general population, but people who don't really have involvement in the mining sector don't know a ton about it. And so when they're talking about it on CNBC and in the FT and in the Wall Street Journal, I think those policies will follow. But I think it's about, the politicians and the people that know how important, how critical, and how strategic this industry is, educating people that don't know about it. And then, the second steps, third steps will follow shortly thereafter. Fingers crossed, at least.
And so Patrick started to mention this, so about the need for further exploration and essentially the investment into that exploration to get the supply of these key metals that are needed to fuel the energy transition for future growth of the industry. So how are the investors on the stage? How are you approaching investments at this moment? Where do we need to be kind of focusing right now? Do we want to start at the end?
Sure, yeah. I think, as I said, it would be nice to see some tax incentives coming through as you have in Canada. I think the flow-through system is really, really, really important for the Canadian mining industry. And I think it can be really important in Europe and really important in the States as well. There's not much you can do about countries that are far-flung and far-flung places where there are great mineral belts. But there are really a lot of areas in Europe and in the States which haven't been explored very well since, the last great push for exploration, I think, there was some in the 70s and 60s and 50s and 60s was really in the States, the last great push for exploration. And the reason was national security. Of course, the reason was uranium. That's why they did all that exploration back then. Now we've got a similar thing coming up, and I think it's just as critical as the search for uranium. So if there are any people from the U.S. Embassy here, please get in touch, and I'll give you some advice. So that's one aspect. But also I think in terms of investors, in terms of corporates, in terms of the larger corporates, they have not invested deliberately in exploration for a long, long time. Anything like, and when I say exploration, I would compare that with other industries which do get investor attention and do actually get big premiums to their earnings. And those industries, the reason why investors like them is that they have growth. And the larger mining companies, as we all know, do not have significant growth relative to, say, tech companies and consumer goods companies. So I think they need to spend a lot more of their revenues on, a larger percentage of the revenues on exploration, R&D. R&D isn't, the mining industry is notorious for not taking up new ideas very quickly, I think. And of course, you need to put money in there to make that happen. It doesn't happen just with a small $500,000 grant or something, or whatever the mining companies are offering now. So, yeah, I think it's important that the mining companies themselves, the bigger ones, go for growth, as many governments are talking about at the moment, including the UK government. And that will benefit them, and it will benefit the general populace in terms of balancing national security interests as well, especially if they explore in places like Europe and the States.
If I could just take that one step further, I think that, another void in the market that I've seen at least is financing for the in-between. So post-exploration, pre-FID, doing all that boring engineering work that no one really likes to talk about, your PFS, your DFS, all that, it's really important. And I think it gets sort of left in the dark quite a bit. Exploration, there's still, you can make $1 million overnight. Construction is big money. You see results, fairly quickly, hopefully. But that middle ground, that engineering stage, I've seen a lot of people skimp on, at least in the junior mining space, and it's solely because they don't have the capital to do a proper study. And so whether that's governments or corporates coming in and providing money and incubating these projects, maybe a combination of both, but I have seen that as a real void in sort of the global pipeline, let's call it.
Yeah, I mean, there's some great comments to unpick there. I'm a big fan of the public partnership model. I think that's one good thing. That's what's happening with all this going on at the moment. I mean, that's going to be a way to solve these big capex problems for sure. I don't think I'm the best person to speak on exploration, despite being, like Patrick, a geologist. So it's a place close to my heart. But I don't do a lot of exploration financing anymore because it's too early stage for us. But we're putting on some of my other hats. I do some corporate work for some companies. I'm very sympathetic to it. I'm actually very positive about exploration financing. We've certainly seen it in Australia. It's got, since the superannuation funds have come in, there's a lot of money sloshing around in Australia now, and I'm hearing it the same in Toronto too. Less so in London. We don't have the retail community, but seeing early stage companies getting finance for exploration. Even just the early shoots of that, and I know that doesn't apply to everybody because we're not all seeing that. But when I was running funds at BlackRock, it was a lot about size and liquidity. And if you don't have size and liquidity, I can't invest you, even if you're the best exploration story in the world. So the bigger you get, the more money coming in, the more interest there is. It's a sort of momentum thing, right? It keeps going. All the companies keep getting bigger, and then you start to fall onto the investable universe of a lot bigger and a broader spectrum of investors. And I think we're seeing the early stages of that. So I'm quite positive. I think it was going to keep growing.
I can't add much more to all that except for instead of the government cutting checks, they should cut red tape and green tape, and that would help exploration a hell of a lot.
Yeah, I agree. Yeah, definitely that's an issue.
Well, I mean, there's been a lot of talk about kind of fast tracking permitting and everything to help with that. Are you seeing that coming through?
No.
Yeah, it's. I would say it's very spotty from what I've seen. Like, definitely, there's some area, like even there'd be far better people to speak in the room about Canada, but it depends where you are in Canada, right? Some are working very hard to fast track permitting. We're seeing that. Obviously, the States is now picking up the pace, so it's definitely places around the world that's doing it, but it is painfully slow in some jurisdictions still, and some of the companies I see, it's just a sort of constant criticism. It's like, why is things not happening quicker? And it's got slower. Exploration, I think, has got slower. There's to Patrick's earlier comments about previous cycles, things were just quicker. Things were, when money was sloshing around, it was just quicker to do things, quicker to get drill rigs, quicker to get people, quicker to make discoveries. The geology's got more tougher. It's less places to go. It's not sticking out of the ground anymore. So you have to go deeper. Yeah, they're harder to find. Bigger discoveries are very few and far between nowadays. So I think it's just we all sort of just need to keep the foot on the pedal and keep pressing and hope that people listen.
All right, so I thought we could kind of shift gears a little bit and look at kind of commodities of interest right now. So as we mentioned at the start, gold has had an unprecedented year. We're seeing huge amount of interest across the critical minerals. Things like copper are quite big. What are you interested in? Why do you think kind of the momentum is there for these
I'm going to
metals?
start so no one can steal my answer. I really like the tin market, actually. I think tin has been somewhat of an unsung hero in this critical mineral craze. It hasn't been a great performer, but if you look at the last 6 months, it's started to creep up. And, I think it's used in a lot more applications than people give it credit for. Historically, tin has been a real supply story. If you look at like the situation with Alphamin earlier this year when they went offline for just a few weeks, the tin price shot up massively, right? So I think there's a real Western scarcity to tin production, which is important. But I think more recently, you have a lot more of a public demand profile for tin through AI, and I don't want to go down an AI rabbit hole by any stretch of the imagination, but that comes with semiconductors and all sorts of other applications for tin. You don't have a ton of tin in the Western world. It's really centered in China, Myanmar. So it's difficult. So I think that's one to watch. I think it's starting to have a little bit of a run, but still no one talks about it too much. It is a small market. I think it's probably the smallest of the big ones on the LME, but that's what I'm looking for in 26.
I'm positive about the usual suspects, gold and copper. I'm not sure we need to talk too much about them. I think I always get asked, are we at the start? Is this just the start of the bull run in gold? I think we're a good way in, given the jump. I don't see it going through the moon, but I'm very comfortable where it is, and the same for copper, given the amount needed for data centers that are having to be built to power AI. So I'm very comfortable with those. I think. To my mind, I've been through cycles before in my career many times, and they always tend to things tend to work their way out, and that's bound to happen. Trump will not be in power in a few years' time. Russia will be allowed to trade with the rest of the world again. China will open its doors again. So things should normalize, and it might not look the same. I don't think it will look the same, but it will be more or less the same. So things. You have a window normally with commodities where things do well. I think the broad floor of commodities is going to keep going up, so the prices will keep rising over and above inflation. But you get these sort of little spikes, and within that, the sort of metals I look at in our space, which tend to be the minor markets, minor metals or off-market type. We've seen this antimony. Everybody's seen the price spike, but antimony used to be a horrible thing that was dirty in a smelter and went to $60,000 a ton. Well, it's now down to close to 40. So I bet there's a lot of people in the room don't even know that. You haven't seen the fall of antimony. These are small markets, right? So they move pretty quick. So you normally have a 2 or 3 window to get these things right. I think antimony will still hold up. We're seeing the same thing come across in tungsten at the moment. So tungsten's looking very good as well. And there's a few other metals coming alongside that. So you get this sort of 3-year window where you've got to play. It's a tough space to be in, but those are the ones that look very exciting to me.
I like uranium. I think lithium will be a comeback story in late 26, 27, 28. But one out of the box, if you keep an eye on it, bismuth.
That's an interesting one that doesn't get a lot of play. I think the platinum group metals are definitely worth having a look right now. I think they've done very well, or at least platinum's done very well this year so far. But it's still, I think, a very strong market coming forward. It's definitely in deficit, so the experts say, and the deficits should continue. The supply is very limited. It's the original critical metal, if you like, platinum. It's only really most of the supply comes from South Africa. Where South African politics is going to go in the future, we don't know. And certainly, if it's essential in many applications, it's a fairly small market. And also, I think it benefits from the fact that gold is very high. It's lagged gold. Traditionally, it's been trading at a premium to gold. And I think that investors will be buying platinum, and also there'll be substitution from gold jewelry into platinum, palladium as well. So I think that's a really good one right now for the next little while, and also long term. Unless you have good relations with South Africa, then the market could be very difficult to get hold of the metal. So again, it goes back to where's the metal going to come from? We need to explore. We need to open new mines in different places to diversify that supply source.
So I can't speak too much about some of the minor metals that were discussed, but gold has dominated a lot of the conversations. And I did see analysts suggesting that it's going to be looking at maybe a $5,000 mark in the coming years. What do you think?
Go on, Mike.
Double thumbs up.
Totally agree. I think it's going to get to 5,000, and I think there's a lot of people questioning whether what's a more reasonable price? What do the banks say? Maybe 2,500 or something long term. It all means it's going to go down, kind of thing. So long term investors can't get involved, and therefore. But the real question is, should we not be asking? Should it? How far up is it going to go from here? I mean, is it going to go to 10,000? I've heard 16,000. Where does it go as gold increases its role in the global financial network? I mean, right now there is a bit of a shift. I think it makes a lot of sense. A lot of people in the room know this already, so it's not really news. But the BRICS countries outside of the U.S. sort of realm are worried about using dollars, and they want something else to use. So they want something that's not going to be confiscated when you have a disagreement with the states. And I think that therefore that's going to continue that trend. And gold is the obvious monetary asset, really. So I think gold's got a long great future ahead of it, and there has been a big change in the dynamics of the market over the last couple of years only.
It's really become a strategic metal. When you talk about it that way, it's it maybe doesn't have industrial uses like when we think of strategic or critical minerals, but it's got other very strategic value that I think countries, governments, etc. are coming to realize, and hence the run we've seen, and hence why I don't think it's going to slow down, at least immediately.
No, I agree with that, Mike. And I mean it. You got to be owning gold for the right reason. This is like pure investment idea, but if you're owning gold for a quick punt, then you're probably owning it for the wrong reason. It should be a stable part of your investment portfolio, and you're owning it for the store of wealth, and because you don't believe in fiat currencies, and that's the reason to own gold. So I wouldn't be able to put a price on it because that's crystal ball territory. But if you just look at the fundamentals that do drive the gold price. Interest rates, well, we know what's happening. Those are coming down. Weak US dollar, good. Central bank buying, good. Flow of money into the sector via ETF buying, good. So all the fundamentals sort of would dictate that gold is in quite a good place at the moment. So I don't know what the price is going to be, but the fundamentals tell me it's not going down in a hurry.
And also one last point to add on to that is it's under own. Hardly anybody has any. I mean, ask your average, investor in the UK or in the States, how much gold have they got as a percentage of the total assets? It's tiny. And so people hold a lot of other things, but gold is under owned, and so there's potentially a lot more buying that can come as people realize that this isn't going away as a blip.
All right, so we are coming to the end of the panel, and I thought that we could just kind of look at some themes for the coming year or two ahead. So we've really had geopolitics, the gold price, really dominating a lot of, and critical minerals. Those have been dominating kind of the entire discourse for the past year or two. What do you think is going to define 2026 and beyond?
I'll give a short answer for this one for a change. Critical is going to become even more critical.
I 100% agree with that. I think with the technology changes that we're facing, with the amount of missiles that have already been gone off in the last 4 years that need to be replaced, critical metals is definitely the number one priority for the Western world.
Well, I think copper will come through, I think, and stay strong and get stronger. Obviously, that's somewhat dependent on the world economy, if it tips over or doesn't tip over. I think, in general, though, I think the outlook is not bad going forward, and I think people are recognizing that copper is long-term going into deficit, and so I'd like to think that copper would do well. As I said, platinum as well, I think is well set up for a good time in the markets. in terms of metal. On a regulatory front, I think there's going to be more government initiatives that we'll hear about with relation to critical metals and relation to mining and processing. So I think those are important things as well. So otherwise, obviously, there's a lot of crystal ball gazing even 1 year ahead.
I think it'll be interesting to keep a close eye on bifurcation of certain markets. I think we all agree that this geopolitical thematic isn't going anywhere. And so it'll be really interesting to see with some of these critical minerals, is there going to be a Western price and a China price, or a China price and the rest of the world price? And they're already starting to see it, but maybe not as exaggerated as some people would like. I mean, people have talked about green premiums forever, and I've never really seen those come to fruition. But I do think we're in a whole different, sort of arena at this point in time. And so I do think you're going to start to see, copper premiums in the U.S. versus copper premiums everywhere else really start to digress. We'll see.
All right, excellent. Tony, Cailey, Patrick, and Michael, I want to thank you for helping us to kick off the One-to-One London event. Thanks again to the panel.
Thank you.
Thank you.